You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's going on in the world of futures options? Well, let's find out together, shall we? It is time once again for TWIFO This Week in Futures Options, episode 450. Going to be a banger. Looking forward to a fun one. Of course, if you want to join us for the live or for the pro Q&As or for the options oddities or for the metric ton of content that is coming to you right now from the Options Industry Conference, the big show I was down at last week. Only one place to get it all and get it all first, of course, theoptionsinsider.com/pro. You also get giveaways while you're there. You got early access to the brand spanking new show that we just premiered on the network on Tuesday, the European Market Brief. So if you like a little bit of futures and some vol and some options, and you always wondered, how is that playing over across the pond? Well, that's the show for you. Just went live on Tuesday. So yet another reason why you should be subscribed to the network. But I mentioned episode 450. It's a big one. It's a banger. So one guest wouldn't do. We had to bring on two. First, we go out to our good buddy, Mr. Dan the Man Gramza from Gramza Capital Management. Dan, welcome to TWIFO episode 450, sir.
Well, I am honored to be with you guys. What an auspicious day today. 450. That's a lot of talking.
That is a lot of talking. Try being me, sir. I have shows that have gone up to close to 1,000. So yeah, a lot of talking. A lot of talking. You're right. I still have a voice somehow after 18 years of doing this madness. And then also joining us for episode 450, we dragged him kicking and screaming out of his hole, listeners. He doesn't want to see the sunlight and talk to you folks, but we forced him. None other than our good buddy, Mr. Nick Howard, the founder of Bantix and the creator of a little platform we use around here on this show called Quick Strike. Mr. Nick, welcome back to TWIFO, sir.
What's happening? Don't forget the flagship member of TWIFO. Right?
Yes.
This was, I believe that I was a heavy hand in picking the theme music, right? Because we were trying
That
to
was you.
license,
You first wanted me to lice This Week in Baseball.
And they wanted to charge for the historical record. They wanted to charge us $50 every time the music played.
No, they wanted to charge a lot. Yeah, so
absolutely ridiculous. So we picked something a little bit more affordable for the $39.
I will say this is still a jump in theme. Whenever I hear it on Thursdays, it always stays in my head for the rest of the day. So fun time. Gonna be a good one, listeners. Let's kick it off the way we like to do with a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. If you follow us on the socials, you'll see we do tweet out this chart. It's one of the premium charts that Nick and his team put together, which I've said it before on the show. If you're not kicking the tires and lighting the fires over there at bantix.com, BANTIX.com, at the very least, kicking the tires on a free trial, what are you doing? If you did that, listeners, you would see that this chart right now is looking biased towards the green, but not quite as biased as we've seen on recent shows. I would say we're hanging out roughly 60-40 green over red. That said, the largest percentage mover this week is to the upside. I won't reveal what that is. Instead, I will save that privilege on episode 450 for Mr. Dan the Man Gramza. Dan, you think you got another movers and shakers report in you, sir?
I think I do, because it's exciting to see what's happening out here in this marketplace. So we're going to start with light side, right?
It's your call. Episode 450. You make the call, sir.
Wow. Okay. Well, let's start to the light side. Now, number 5, heating oil up 6.82%. Number 4, consumer discretionary sector up 6.91%. Number 3, technology sector up 7.81%. And number 2, lumber up 7.91%. You may remember it was number 3 to the dark side last week at being minus 2.17%. Lean hogs up 10.56%. And that was number 4 to the dark side last week at minus 1.79%. So there we are on the light side for this week.
All right, so you got a dark side in you too?
Yeah, let's take a look at that one too. It's interesting. Number 5, gold. Minus 2.49%. Now, that was number 3 to the light side last week at being up 3.75%. That's an interesting market. Is that what you would expect to see today with everything going on? Number 4, palladium, minus 3%. Number 3, nat gas, minus 3.79%. Now, that was number 2 to the light side last week at being up 4.92%. Number 2, healthcare sector, minus 3.84%. Number 1 to the dark side, minus 7.91%. It's oats. And that was number 1 to the light side last week at being up 9.59%. Talk about volatility, huh? There's some volatility in oats.
Yeah, oats. Wild. I wish they did some options paper, Dan. How long have we been saying that now on the show? We wish oats would do more than 3 contracts so we could actually
450 episodes worth.
I would love to sink my teeth into oats or lumber because they move. You remember everyone talks back in the pandemic days, Dan. Everyone talks about, meme stocks and crypto and a bunch of other wild things that were going on. Everyone forgets about lumber. Lumber was probably the most volatile asset on the planet for that year and a year and a half period out there. It was whipping and sawing all over the place week after week. And maybe we're seeing a little bit of a resurgence of that. Speaking of returns, Mr. Nick making his triumphant return to the show. Mr. Nick, since the last time we had you on, we've also been taking advantage of your CVOL tool to break down the week's worth of action on the CVOL front. You think you can handle doing a little CVOL movers and shakers breakdown for the folks, sir?
So for clarity, the CVOL tool is a tool we built for the CME group, right? The CVOL is a proprietary calculation that exists within the exchange, right? So, and we are the ones who built that process for them and built the tools to present it. So just want to make that clear because that is a CVOL with a registered trademark to the CME group. So I'm sure that they'll appreciate that, knowing that. Yeah, looking at movers and shakers here, you know, what Mark has provided for the conversation today are the aggregates across the different asset classes. CVOL has a variety of measures that will go deeply into the benchmark products, but there are also aggregates that exist across the Treasury, the ags, the FX, and the metals, and overall the commodities. So the biggest change on the week we have is the Treasury market. Now, again, we're looking at the CVOL. That's the main sort of at the money volatility measure, right? So we had an increase of almost 4% there, with a trend showing that, you know, kind of a mixed trend. When you look at the tool, you're going to see some red and green bars next to the change value. So that's going to show you how the market has moved over the last 5 days. So what you see prior to this almost 4% increase, we had a couple down days, an up day, and then a down day previous to that. So generally down in volatility over the course of the last week. And as you look at the tool as well, there's sort of a range indicator over that period of time. We're at near the high end of the range for the week as well. So 121 and a quarter, with a range from 117 to 123 and a half roughly. So we start out with the Treasuries. The ags are next with a slight, almost 5/8 percentage point increase. So not much going on there. Mixed trend as well. 3 up days, 2 down days. The FX is next in third place. And this one again is, we'll call it, you know, a 0.25%, a little bit better increase. So I'm going to call that flat. It's also been mixed, been up the last 2 days, but down 3 days prior to that. And then the next 3, I won't even, there's 2 Treasury measures in there, right? So when you do look at the aggregates, one is based on price fall, the other one is based on basis point volatility. So you know, you'll have to differentiate between those 2. So we'll skip to the metals. Metals is pretty flat, mostly down this week with a little uptick. And then the commodities overall, which is going to be, you know, that aggregate across all the different products that CME offers there, is pretty much flat today. Low end of the range for the week, and the first little uptick that we've seen in the week. So again, CVOL, lots of different products to measure there, all kinds of historical data available, as well as real-time tool. I think it's still presented for free off the website, so you can see as the market moves, you can see what CVOL is doing. And the nice part about that tool, so a lot of these volatility tools that are aggregates of this sort, they'll just show the volatility measure. One thing, and I will have Bantix take credit for this. One thing that we did as part of it, and the CVOL pump itself doesn't have the actual underlying future associated with that particular calculation. What we've done is we've married that into the chart, because, you know, when I see a volatility chart, I want to see what's happening in the underlying as well. It's going to give me a lot more information than just, you know, seeing that number. If I see a big spike up, is that because there's a huge break, or is that because there's a, you know, unexpected rally, right? So those are the numbers. That is a good tool, as Mark said. I think you're going to see a lot more stuff with CVOL as the years go on, and I'm excited about it because, you know, the natural progression for something like this is to have a future associated with it, and then also options on futures. Dan, can you just imagine the jujitsu hold that you can do on the CVOL market with some options on these products? Huh? I can't even.
Well, you know, you're right on target, and it would be a natural way to develop this product. What you've created is brilliant, Nick, and it does give insight. Where else are you going to get this kind of information? And if on the institutional side, if you look at professional money managers as well as private traders, it's another way to kind of fine tune your portfolio or to express your opinion about volatility. So I think it's a natural. It's just a matter of when those kind of products are created.
Yeah, I'm excited. I think what's nice about it too, Dan, in my opinion, is that it's a number, right, that can settle to cash and a great opportunity for retail to understand the underlying markets that they're trading, right? So they're able to follow that market's action, trade that market action, and then, have an opinion about that market action. So see a lot of potential there. I'm excited to see. Hopefully I'm around when that happens because it should be.
Well,
should be fun.
Nick, I think you will be. I think you will be because the characteristics that we're talking about with this kind of product, it is a natural. And the CME is always looking at possible product development, anything that can help inform a trader, an investor. And this one is an example of that kind of product. So well done, Nick. Well done.
Yeah, well, we can't take a whole team of people involved there, but also, like I said, the IP goes to the big dog, the big exchange, and the IP of the strength of presentation goes to us. So
I will say I like having you on the show, Nick, because I've been doing this report for a while, and we're always banging out with the show. I never stopped to look at the trend data and to realize that the red and so there you go. You added a new wrinkle to me just for this report that I've been looking at week after week, listeners.
That's why I'm here. Those are my lines. I picked those lines out. So
those are my lines. I like it. Well, you got us all excited about the potential for maybe a tradable CVOL product. I've been saying that for a long time. I hope somebody over there at CME is listening, because it certainly would be nice to have some vol products on some of these other underlyings out here. Speaking of other underlyings, first off, our chat is very excited to have both of you on the show today. So Nick and Dan, you're both getting some love from our pro members. And we've got a lot of stuff lighting it up this week. We've got gold number 5, as Dan was talking about. Gold's obviously been pretty active. I know, Nick, you're a big gold guy as well. Nat gas number 3, and it looks like our chat has requested both metals and energy this week. So I think in the spirit of keeping the people happy, let's kick things off in gold.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the world of metals, the shiny stuff, pretty volatile stuff of late as well. You know where to go if you want to follow along with the show, play the home game. CMEgroup.com/TWIFO, TWIFO will get you there. /TWIO should also work out there. That should get you to the TWIFO reports. Then once you're there, go into that asset class drop down. Go pretty much all the way to the bottom, listeners, to metals. Then we're going to hang out in product family precious. Going to kick things off in the big dog, which is gold. Dan, I know you just expressed some surprise at seeing gold on our list. Gold's been a wild beast this year, was our leading mover to the upside on the futures rundown for a good chunk of this year to date. It has obviously given some of that back as we're coming into the show, listeners, at right around 32 and a quarter in that front future, obviously well below, about 300 handles below that recent all-time high it just hit. So Mr. Dan, we'll start with you. What's catching your eye out there in the big dog and the shiny stuff right now?
Well, what's interesting about it, from my point of view, is the fact that we found buyers today. That's what we're seeing, buyers coming back into this market. And what we've done is we've been in a sideways mode here from 3,200 to 3,500. That's basically where we've traveled. And as we dip below that, which is what's happened over the last 2 days, we've gotten low enough to find some buyers coming in here. So my first thought is, are they motivated? Are we going to see follow throughs? The expectation for tomorrow is indeed to see some follow through in gold. We would be looking for that. And the next objective to the upside would be around 3260. We're not looking for a screamer of a day, but we are looking for some positive movement. I have to tell you, though, I think over the next few months, possibly, we could stay in this 3,500 to 3,200 kind of band. I mean, that's a lot of volatility and there's a lot of opportunity. It's just fundamentally what we've seen is kind of the max right now. That 3,500 to get back to there, it's going to take a lot of uncertainty out there to create that. And do we have that into the marketplace? A part of, I think, what we've seen over the last week or so is the calming down of the market. Yes, things are crazy yet, but people are getting kind of used to this tariff thing. And there is a 90-day extension on that. So that calmed things down. So it seems the jolt that we saw that created a lot of volatility right now is kind of simmering. So follow through to the upside, yes, I'd be bullish on gold at these levels. But the issue is what happens after the next couple days? Can that upward momentum be carried? And I just don't see that happening unless we get some new news that can stimulate that market. So it's kind of where I feel about gold right now.
Looking for some new news in gold. Mr. Nick, I know you used to be a regular on the show. You used to love talking about whether or not gold was paying the rent that week, whether you could buy the future and buy a put and do pretty well. Seems like gold volume-wise is doing pretty well this week, a little north of 300,000, about 310,000 contracts on the tape. Not the most active week we've ever seen, but also north of the rough average we see, usually around 250,000 contracts on the tape by this time in the show. That said, Mr. Nick, these reports are your baby, so I'll let you run with it. What are the TWIFO reports telling you about gold options activity this week, sir?
Yeah, so since it's the 450th episode, before I kind of chime in there, just to reminisce a little bit, that when we first started doing the show, we were having these conversations every week. So finally, I just told Mark, I'm going to build a report specifically around the show, and that's what TWIFO is. This report was based on the fact that we would have these conversations every week, and it just made it easier for us to ask the questions. And for those of you out there who can, the tool's free, right? It's out, but if you're inside a subscription or inside, you can actually click on the numbers and see some of the history associated with those numbers as well. So it's something to keep in mind. But the most important thing to recognize is that this thing is updated every day, all week, right? So you're getting a running look at what gold's doing. So
I've said it many times. This is the best deal for people in options data that I know of. I'm amazed. I'm stunned that no one has ripped this off yet, Nick. This is a genius idea. Everyone should be doing this and giving people this kind of data, and yet no one is. So, Nick, you get the feather in the cap for still no one has stolen this idea to this day, sir.
Imitation is the sincerest form of flattery, right? So we've been flattered quite a bit in Quick Strike over the last 20 years. But yeah, to Dan's point, right? I mean, I guess I could go and talk a little bit about the puts versus hedge puts versus futures. But I want to kind of add to Dan's thought process about the 32 to 3,500 band, right? So in a situation like this, like you can look at the chart, and again, I'm talking purely from a guy who's traded before and looks at the chart. I'm not active in the market in these markets right now because we're in kind of build mode. But when I look at this and hear what Dan has to say, I feel like there's really some potential opportunity for trade here in the options themselves, right? So even with this $300 range, 8 to 10% range that we're looking at, we have, as Dan mentioned, a lot's got to happen to the upside for us to go through that. So it's a real opportunity to look for a call spread that might be meaty and sell that call spread, right? And maybe able to purchase, a put that's nearby, finance that put a little bit with the call spread sale that you make, because it's going to take a lot to run up past that high point that we've seen in the future, right? If I'm looking at the highest over here in the current June contract, I think that was like 3509 or something like that, 3510. So there's opportunity in the options when you listen to experts like Dan say, hey, this is where I think this range is. So based on that range, you have some real opportunity to trade, right? Selling a call spread to help finance a put, selling a strangle, right? Looking at potentially doing a well-positioned risk reversal where you sell upside call. That's really going to take a lot to get up there and buy yourself a put down below, right? So there are some good opportunities from that standpoint. So as Mark mentioned, a couple things I always like to talk about, just from my history of trading is and I call them mini straddles, so to speak, right? So it's looking at an out of the money option that might be underpriced or might be near an overbought strike or an oversold strike. And you get an opportunity to buy that strike and hedge it, and then hopefully see that future, the underlying that's associated with that option, move back in the direction that you think it should be. So if it's overbought, it comes back down again. So your hedge works for you, right? You get to buy a call and your hedge works for you. And if you buy a put and you buy futures, your hedge works for you, moving back into a normalized area for that price. So if you look, and we have a tool inside, it's called Trade Ideas Breakevens. It's in the system, and it gives you what your break even is on every hedged out of the money option that's there. You could do the math yourself. There's free spread builder tools that exist out on the CME website, so you can buy a put and hedge it with futures, buy a call, sell futures against it, and see how many ticks you got to move in the underlying to get your money back. And I always like those because it teaches people, how to trade delta neutral and potentially how to utilize the gamma, which is going to change your delta. And you learn how to trade futures by having an underlying options position. So it even helps your margin position that's that you have, in your account. So I think that, given that we're at such a high number, 10%, 5% still gives you a pretty decent price movement. There's some real chance to kind of, cut your teeth trading options, and getting a feel for what's going on in the market. And I'm going to look here real quick, Mark, while we're on. A lot of people forget. Let's see what we got here. Do we have anything here? Unfortunately, we don't. So I was looking at the micro gold options, right? If you really want to get involved and not have to do too much, but it doesn't appear that there's much takeoff there at all. So that's unfortunate, because I'm sure, that would be a great place to start here. In the micro silvers, there are no options yet, but I guess to shore that up, I think there's some real good trading opportunity, given we got a good range, probably a pretty solid band, as Dan has talked about, and probably a decent amount of the term structure that you can trade, and put yourself in a position to have a good return without getting hurt too much.
Dan, you were talking about some potential for the future. Nick, I know you like some puts in gold, and right now the most active contract in gold are the June par puts, the June 3,000 puts, trading almost 9,000 times this week, including about 5,000 today. So I had to go digging while Nick was talking. They've been trading all over the place today. $2.50, $8.50. They average out for an average price today of around $5. So I have to ask you, Mr. Dan, gun to your head, you got, what do we say, 12 days to go for these puts, $5 for the 3,000 puts in June, sir. Would you be a buyer or a seller, sir?
I'd be a seller.
I had a feeling you would say that, sir.
Yeah, and the reason is the behavior we're seeing right now. The thing, I think what Nick said was right on the money. And the only other thing I guess that goes through my mind when he was talking about that, it's the timing of it. Right now we are seeing buyers, and if we look at that range that we were talking about, to cover that range, the way gold has behaved, it takes 4 days, 6 days. Right now, the most recent break took 6 days to get where we are. So that would be just one other piece I would add in here. If we were a seller of those puts, if we were a buyer of calls, or we lay off some of the cost with the puts, from my point of view, it's got to work in the next 5 days. And if it doesn't, I give it the big adios and stand aside, because we're looking for volatility. And we're looking for directional movement. And I want to get paid for the trade. I guess that's the only other piece that goes through my mind as I look at this.
Dan, would it surprise you? We just put that up as a flash poll for our audience just to see what they were feeling right now. And 100% of the early voters want to buy those puts for $5. That's kind of surprising. Including, we have a comment here from Pete Harrigan. He says he's a buyer, but he's addicted to long gamma. Not that there's that much gamma that far out. Yeah, not much gamma on the 3,000 puts with 12 days to go. But that kind of surprises me. I thought they'd be, I'd be with you, Dan. I would be selling those puts. But apparently our audience, they're degenerate premium buyers when it comes to gold, Dan. Wow. I guess
that's great, because that's what makes a market, right?
Yeah, you and I will
those two opinions.
You and I will be selling to them all day long out there. Wow, that's funny. Wow, okay, $5. Hey, I guess they're looking for gold to just literally fall out of bed over the night. Which way would you go, listeners? You can vote. We'll leave this poll open for the rest of the day so folks on the podcast can play along too. As we keep playing right on into our next segment, we had a request for energy, and nat gas is number 3 to the dark side this week. So to the world of energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the world of energy we go. Pop out of the metals at the bottom of that asset class list. You're going to go 3 from the top to energy there. And then in product family, you're going to go down 3 slots to nat gas. And that's where we begin our journey in energy this week. A pretty active week in nat gas. Nearly 700,000 contracts on the tape, about 670. By the way, nat gas hanging out as we're kicking off the show in that front future. 336, so kind of vacillating around this level. It's been vacillating around for a while, off 43 cents or about 11.5% just since Monday. Obviously, you go out to the end of our show last Thursday, off nearly 4%. Mr. Dan, sir, I know you like yourself a little bit of nat gas. I know our audience does as well. What's catching your eye out there in the Widowmaker this week?
Well, what's interesting about it is, 1, its current behavior, and 2, it's not what I expected. And the reason I say that is last 3-4 days we've been down, and it's logical. We have a lot of nat gas globally as well as domestically. So that behavior, kind of logical. But what surprises me with it is if we think about the tariffs, for example. If you think about the murmurs that you hear from countries like, let's say, Indonesia, Europe, the EU, well, what they're talking about is they say, okay, Trump wants to have some kind of deal. All right. So what can we buy from the United States that's kind of easy? I mean, are they making stuff that we can immediately plug into our economy? Well, wait a minute. One thing that is easy, in both of these areas, countries, sectors have said this, that is, hey, let's buy more nat gas. We can pump it right into our system. We're going to need it sooner or later. We don't have to convince anybody to buy it. It's a part of our economic system. So let's buy more nat gas. That'll help us with our trade balance. So that I expected to see a little more action to the upside in nat gas. But the issue is the timing of that. So do we have that demand here today? No. Those are intentions. And when I hear someone talking about that kind of thing, it's what I call an anticipation move. And right now, the market's not anticipating these other countries buying this. And what we're seeing is the supply-demand situation. The other thing we want to look at, some of the manufacturing activity in the United States, it's down a little bit. We're seeing that with the New York activity report that was down a tad bit. And if we think about use of nat gas, Well, we use a third of it to heat our homes, cook our food. We use a third of it industrially. So steel industry, chemical industries, they use a lot of nat gas. And we also use a third of it to produce electricity. And we produce more electricity in the United States with nat gas than we do with coal, for example. And it burns 60% cleaner than what we get with coal with the current technologies that we have. So the action that we're seeing here from a straightforward supply demand situation makes sense. So, what does that mean? If we've been down for the last 4 days, should that continue lower? Well, if the supply situation does continue as it is right now, then the 320 would be the next objective and the magic $3 right below that. And right now, the market's going to be looking for that to be the floor when it comes to a break lower. So, how it moves lower, if it does, and when, I think it's going to be important for us to look at when it comes to nat gas.
All right, Mr. Nick, like I said, a decently active week, but not an explosive week, pun intended, on the volume side in nat gas. What's catching your eye in the TWIFO report for nat gas this week, sir?
Oh, well, I was just gonna say nat gas is not something that I'm too comfortable discussing, but I will give it a shot here. I do want to take one step back though, and about the 3,000 puts. Okay, I just looked at that as a mini straddle. I mean, it's got a 5 delta, the 3,000 puts. You have to have a $55 rally to have that pay off from a hedge standpoint, and you have to break. Not so much, but you have to break quite a bit in order to have that go in the money. So I'm with Dan. I think that's a better sale than it is a buy or part of a sale in a 1x2, maybe buying one a little bit more expensive and selling 2 of those. So you have a little bit more room to actually make some money if the market does move to the downside. So not a huge fan of outright purchase there, even hedged.
Can I say, before you keep going, our audience even disagrees with that even more strongly. Even more people are voting now, and they're all still 100% buyers.
Yeah, I don't know. I mean, maybe
Wow.
it could be, but I think people, being retail minded in a lot of ways, because depending on what products I trade, right? I could be professionally minded in some products because I have experience with those, and retail minded in others because I don't. And I too often think people are lured in by the cost of an option, thinking because it's not that expensive, it's cheap. But the reality is sometimes you spend a lot of money on a cheap thing and it's just garbage, right? So anyway, don't really know other than what opinion that I might have. As far as the nat gas goes, I don't even know if I'll be able to add anything from the TWIFO standpoint. I'll just would more like to ask a question, and maybe you guys can talk a little bit about that. When you look at this from over the course of time, we're really the realized volatility of the underlying is not that far off what we've seen for lows, over the, well, let's just call it's below the mean over the last 3-year period. So, I'm looking at that vol curve and seeing some really big spikes in places where there are breaks, but the breaks don't look to be that great. So that's why this market scares me, because you get a move and you don't expect that kind of vol impact, but then you do get that vol impact. So do you guys have any kind of thoughts on that in this market? Because this market scares me. Of all the markets, I've seen too many people get roasted in this market. So
yeah, they don't call it the Widowmaker for nothing, right? And you're right. Yeah. I'm looking at it right now, listeners. You can see it for yourselves on the TWIFO report. A 55 vol in that June contract going out to May is a 55. June is at about almost a 60, 59.5. You're right. We've seen nat gas vol a lot higher than that, nearly double that. Doesn't take much to get there either. So if you're coming in looking to aggressively harvest a little bit of the old risk premium in nat gas right now, might want to be judicious, or at the very least keep your powder dry, because you're not getting a ton for it. I know when you see a 55, 59 compared to a lot of the other assets we're going to talk about, equities, ags, I don't care what it is, most of them don't get north of a 30. So you might say, oh, nearly double that. That's great juice. Why wouldn't I want to sell that? But as Nick pointed out, historically in nat gas, that is not great juice. So you may want to be a little bit judicious about blasting away. Mr. Dan, do you agree, sir?
I do. I do. That's a market that can really give us some movement. And the issue with it is it's not only clear, not always clear in terms of what's driving it. We have fundamentals that we were talking about, excuse me, like right now supply is high, but we also have that anticipation. This is a commodity that really does look forward, as many markets do. You know, what is that future demand and where is it going to be coming from? And what is that global supply? It's truly a global market. And I think that explains some of the volatility that we're talking about. It is a market you want to be careful with because it is so volatile.
Looking here, what's lighting up the tape in nat gas this week, listeners. And like it was in gold with the par strike, the 3,000 puts in June, this time we're going out to June again, about the same length of time, about 12 days. And to the par strike again, this time to the 3 puts, going up 31,000 times this week, listeners. Back and forth, the big day was actually yesterday, about 13,000 yesterday, almost 8,000 today against an OI of 44,000. So obviously, size OI left on this strike. I was just digging while Nick and Dan were talking. Looks like they went up today for an average price of around 2.5 cents. So we were just talking about vol is cheap in, at least historically, in nat gas. Gun to my head, if you had to tell me right now you have to buy the par puts in gold going away in 12 days for $5, or the par puts in nat gas for 2.5 cents, also going out in 12 days, I'd probably do the nat gas puts all day long and twice on Sunday. As we said, it's a low vol level. We could see this thing easily break through the 3 handle again, or go back to 4. There's a lot of 4 calls trading today as well, or this week as well, nearly 30,000 of them. So both directions are active. But yeah, if I had a gun to my head, if I had to buy some 12 day to go downside, I probably would go the nat gas route. But keeping it in energy for a second, that might be another flash poll we could do as well. We got so many of them out here, but you folks are degenerate premium buyers out here this week. Interesting. Maybe this recent volatility in the market has shaken you of your premium harvesting out there. But speaking of vol, we can't get out of energy without talking about WTI as well. A WTI 61.18 right now, up about 60 cents or about 1% just this week. If we go back to the end of our show last week, it's up roughly 3%. So a pretty good week, but obviously outside of our top 5 to the upside on a very upside heavy week. Also surprising a lot of people that were getting some upside. I think it's fair to say the momentum in WTI of late, especially with Trump rolling in on the back of drill baby drill. Then, of course, a global trade war killing demand. So you're talking more supply, less demand. The momentum definitely seemed to be to the downside. And that was the case, hanging out back above the 60 handle again. If you want to hear some deep thoughts about WTI, check out the Futures Rundown show we did yesterday with Carly, where she had some interesting, some might say shocking levels that she was calling for in WTI. But that said, Mr. Dan, this recent resurgence out here in WTI may be a little bit of a surprise to some folks. Like I said, the momentum has mostly been down for the lion's share of this year. What's been catching your eye out here in crude oil this week, sir?
Well, it's a little soft today. And if we think about the environment that we're in, it's what I call an anticipation trade, is that environment. And that goes to Trump talking with Iran, and that there may be some type of deal. Well, if you look at, let's do it this way. If you look at Iranian oil, when Trump was first in the presidency, he squeezed them down to less than 2 million barrels a day. Excuse me. Right now, they're pumping near 4 million barrels a day. I think they're getting near capacity. The issue, though, is their ability to get beyond the sanctions, which does crippled their economy. We've seen the impact of that. And, the fact that a lot of people say, "Oh, I can't buy Iranian oil because of sanctions," it doesn't mean that other countries do not buy Iranian oil. But the idea of the deal that may be happening implies more supply, and we have OPEC Plus saying, "Hey, you know something? We're going to continue and we're going to add more production out there." The issue now is what we're seeing, I think, reflected today. Well, over the last few days, it implies demand was there. We saw a rally in crude oil. Is the demand there now to absorb extra supply? And that was where the doubt comes in. And I think part of what you're seeing here today is that possibility. What's also interesting about the structure that we're seeing is it's bouncy. It broke lower, but it also came right back up a bit. So tomorrow, we talk about near term. Tomorrow it implies a sideways market. It'll be interesting to see if we get a directional component. The bias for crude is to get above that $64 level. But let's go back to the fundamentals just for a minute. If I produce, which a lot of our production is shale-based production for crude oil, that shale-based production, depending on the debt structure of the company producing it, their usual break-even point, $65. They ideally want 70 so they can have some profit in there. When we're trading down below that $65 level, for some companies, they got to throttle back a bit. So it's a component that we want to think about here. Now, from Trump's point of view, he wants lower prices. He wants lower gasoline prices because the less money I put in my gas tank is more money I have for consumer spending, which is 70% of our GDP. So right now, crude is trying to figure out what to do. The bias for a move to the upside. Current environment, it's potentially bearish. The biggie that people are going to be looking at, it was like $65 before, it's around $56 right now. If we get below that, then we're looking for a dramatic change. But one thing to keep in mind, if you're on either side of this, we've been trading in a $64 to $56 range now for the last few weeks. And I really don't see that changing unless we get some fundamental shifts out there in the marketplace.
Let's see what shifts we're getting on the options front, listeners. Is it a banger week in WTI? It's right around what we expect. Usually expect around 400, 450, and it's 468 right now. So I guess you can call it slightly heavy, but we've seen WTI putting up 1 million plus contracts not that long ago. So from that context, not quite a banger week. And most of that, we were talking about a lot of July paper in gold and in nat gas. Looks like the lion's share of the flow, nearly 40% this week, going up in the July contract. Has about 32 days to go. But Mr. Nick, like I said, this is your baby. And I know you like to watch a little bit of WTI, a little bit of crude oil every now and then. What's catching your eye on the TWIFO report for WTI this week, sir?
Well, I think it's always beneficial to have somebody who's paying attention, like Dan, whose living is to pay attention, and then having the tools available to look at the things that Dan's mentioning or to comment based on knowing how to use what's available on QuickStrike. But just seeing what the intraday ranges have been in crude and where the producer break evens are and the kind of the lows we've been at, and I look at our little break even report, it seems to make a lot of sense. Like the stuff I talk about, the buying the puts and buying hedged puts, seems like a real opportunity here at this level. So many, as I look, like in from the 1 day, the 4 day, the 5 day, the 6 day, the 7 day contracts, based on, the mid markets here, you have to have movements between, $1.25 and $2 to get your premium back on, buying the put and hedging with the proper future. So seems like there's some trade opportunity here, even in this tight little range, to be able to use a cheap put in order to scalp some gamma at a low margin level in these products. So it's that's what's catching my eye initially, because the specifics of what's trading, that's great, but what's available to trade is always going to tell me a little bit more. And the other thing I wanted to mention and look at, and I know that this was a big deal for a lot of people in general and at the exchanges, and Dan would be curious to hear what you have to say about this. Now there's options that expiring every day, right? In these products. And I think as much as, it sounds like a good idea sometimes, I'm just not seeing in a lot of these, I'm just not seeing the OI that I want to comfortably trade those. So it'd be curious to see if, you would think in these markets that where we have enough movement intraday to offer some opportunities for the zero DTEs, that we would see a little bit more action in those, but I'm not necessarily seeing what I want to see there.
You're right. The trend has been to near dated in almost every product. And you're right. Some respond a little bit better to others out here right now. Looks like the big dog, you talked about cheap puts. Looks like some folks might be listening to you, Nick, because the big dog in WTI this week are the double puts, 55 puts expiring in July. So they got about 32 days to go, listeners, trading about 18,000 times this week. The big day was actually Monday, 6,600 on Monday. Looks like some folks maybe bailing then, and then 4,500 on Tuesday, 2,800 Wednesday, 4,000 today against an OI of about 16, almost 17,000. And I was looking, looks like they traded for about an average price of 75 cents, at least today. That might qualify as your cheap put there, Mr. Nick. It might be a little bit outside your range. Maybe you think 55 is a little bit too far out of the money, but you got some time.
I think that's a good price. I mean, because if you look at what the delta on that's a 17 delta. I think that's a great location.
I don't hate that one at all. I think of all the puts we've talked about, that might be my favorite so far on the docket today. No need to sell those. I'll buy those bad boys without no need of the gun to the head, Mr. Nick. I don't mind that. I don't mind that one at all out here. And it is episode 450. So let's squeeze on even more fun content for the folks. We got time for probably one more complex. I'll let you and Dan decide. Where should we go next? What complex is lighting up your tapes? Go ahead, shout it out.
Well, I don't have a preference. I mean, we can look at equities. We haven't done that yet. What do you think, Nick? Shall we take a peek at those? Or
I gotta say, it's like I've been more oriented towards the equities of late, so I'm always paying attention to what's happening in primarily in the E-mini or even the smaller stuff in the Russell and that kind of thing, just to see what the broad market's doing. But yeah, I'm always glad to talk. Although it's, the thing is, this market has moved so much to I'm going to take a look real quick here.
Well, while you get that set up, I will toss us to the wild world of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, for our final complex, our final product here on episode 450, our 450 episode spectacular, we're going to pop out of the energy drop down, and it's an alpha order list, so equity is pretty easy to find. Just go down one slot in the asset class. Then in product family, we're going to go US Index E-mini. And Nick has requested the E-mini S&P. So to the E-mini S&P we go. And is it a banger week for the E-mini? Yeah, I think you could say so. 3.5 million contracts. Now, Nick, one of the challenges I always have, and maybe you won't. Maybe you'll have an easier time finding the needle in the haystack than me. But when you have a product like the E-mini putting up 3.5 million contracts, it is somewhat challenging to find the nuggets in there, especially when close to half of that is expiring in 24 hours, Mr. Nick. Do you agree?
Yeah, I'm taking. So what I'll tend to do with this, right? The first thing I want to look at, especially as you and I have talked about our new equity offering, So, you know, so much of the volume is occurring at the front end of the term structure, right? So you really kind of, you're paying attention from 1 to 5. Like today's Thursday, and, you know, you're going to go, you know, Thursday, Friday, and then Monday even. But if I'm looking today, so what I'll do is, you know, and you should be able to see this even on the free, well, not necessarily the intraday stuff, but the big volume number, it looks like in the E3A, which is expiring in E3A, which is expiring in 4 days. So it looks like the Monday contract. I hate the naming convention. Okay. It's just a terrible naming convention. 80,000 of the 4,900 puts traded and a total of 81,000 traded in that strike today. So that's a big one. So I'm going to try to take a look and find where that's coming from. If it's part of the calendar, if it's outright. Let me see what we got. So that's kind of, you know, first of all, I'll look in the term structure and see where the big spikes are. The big spikes are always going to be in those front contracts. And then I'll try to, you know, figure out what's going on in terms of particular strikes. Now, the one thing you got to be careful of when you do look in quick strike, occasionally you'll see a spike in a strike that somehow had like a readjustment in clearing. So what I'm not seeing is a specific strike around that, a specific trade around that 4,900. So I'm not exactly sure where that number is coming from. But, you know, if I go here and I look at the TWIFO, I'm going to take a look and see where we're going to.
So you're saying those garbage puts, that isn't someone picking up a literal penny in front of the steamroller? That's an adjustment in clearing?
Yeah, a lot of times when we get the files from clearing, we'll see an adjustment. Yeah, and that number will come across, and we really have to fish around to see where that's coming from.
Oh, that's actually reassuring to me, because I was kind of getting depressed at just how much penny and nickel picking up there was in front of the steamroller in the E-mini. So it makes me actually happy to see that that's just a clearing adjustment.
Yeah, because I'm looking at it right now. So I'm looking at the total. It says 40,000 of those traded. Oh, here it is. 40,000 traded on Globex and 40,000 on the block is what I'm seeing in our breakdown. So Mark, what you can see is if you click on the most active strike in that column, it'll pop open a little window for you. Do you use that function?
I just did that right now. Yes.
Yeah. So it pops open a little window and then it'll show you the breakdown on a day-by-day basis, right? And those little bars, the blue, yellow, and purple, will show you where those trades took place. So it says 80,000 took place, 40 on Globex and 40 on the block. So that will give me a little bit more insight so I can try to find out specifically where that's coming from. Yeah, we're getting 80K there, and I could easily look at the blocks then too for this as well. Look at the block trades and see if we can find out where that number is coming from. E3.
I'm glad it's not just me that has to wrestle with these puts, because sometimes I'm wrestling with these puts live on the show and it's driving me crazy. So I'm glad it's not just me, Nick.
Here we go. We see here we have it. We have at between 1025 and 1028. 25,000 lot, a 250 lot, 1,000 lot, a 1,800 lot, a 2,000 lot, and a 10,000 lot traded a nickel that many times of the 4,900 puts in the Monday contract, right? So that's the thing. You gotta, generally that number, that 40,000 is coming through on the block. Where I'm not easily seeing it is in the result of the trades for on the Globex side. So that's where I'm trying to fish and see why I'm not seeing that 40,000, unless it got because I should see stuff.
So you're thinking that is a legit picking up a nickel in front of the steamroller trade?
I think the fact that it's reported on the block, that 40,000 exists for sure.
Okay.
Why I'm not seeing it on the Globex side is the potential that it's reported. It's not. I don't know why it's not reporting on the Globex side. So that's something I'm going to have to look into. But for sure, it traded 40,000 on the block side. But
so I'm right to be depressed for how many nickel picker-uppers there are still in the E-mini S&P. They haven't been shaken out, even by 150 handle intraday swings. Wild stuff.
Yeah. So yeah, but I like what's been fun for me as being being to the equities late in my career is I like the shift towards the front end of the term structure, right? Because it's just, I think it just makes it easier to grasp. And you're going to see, as Dan will attest, you see those pockets of trades in like the June, December contracts, right? As you go out in the term structure, because people are hedging, the quarterly stuff, whatever, or the end of year stuff. But, it's, even in the other index product that trades out there, way more of that is in the front than here, right? So this volume, at least you're seeing in open interest, you're seeing a little bit of distribution, but over on the other, cash side, it's really, really pushed to the forward part.
Mr. Dan, obviously it's been a wild couple of weeks, a wild week right now in equities. The massive rally, 3+% in the S&P on Monday. You're hearing some talk that maybe it wasn't just straight buying, it was actually a lot of short covering from some funds who got caught wrong-footed on the heels of this trade war announcement. So interesting stuff. Mr. Dan, what do you make of this recent aggressive rally we're seeing out here in the S&P, sir?
Well, I would say it's a calming of the market. The stimulus, the reasons for this volatility, it's still there. All it takes is a couple comments, a couple possibilities, and we're going to see volatility again. But right now, the idea that China and US may be talking a bit and trying to sort it out, that was the big one. And we saw the result of that over the weekend. If people didn't have confidence in that, what would have happened is these markets, the futures opened 5 o'clock Chicago time Sunday night. It would have opened stronger on the idea, but if there's a lack of confidence, it would have broke back to the downside. And going back to your point, maybe it is some short covering that we saw that really held the market up. And if you look at the last few days, what do we have going on? Well, we have Trump on his visits to the Middle East collecting money. And I think there's something that a president can do. They do not control the economy. The Fed does, from my point of view. But a president can create a psychological factor that maybe money is coming back here. They hear these trillions of dollar numbers, and maybe it will bring more jobs. Now, the thing about it is we all know, that's not happening today. That's a possibility for the future. But does it create an enthusiasm? If we look at PPI today, that was down 0.5%. So it says, hey, costs are coming down a bit. It's the first lower we've had at that level, that amount, since October of 23. So that says something. Retail sales are up 0.1%. Not a huge amount, but it's a big deal from the point of view that, do people have money and are they willing to spend it? And retail sales is one of those barometers. And as we talked about, consumer spending, 70% of our GDP. So I think we're seeing some things that are positive for the marketplace. Powell came out and said, here's the deal. We got some volatility possibilities, and we're just going to watch the economic data and see how that unfolds. What they're doing, I think, on the Fed level is right on the money. They shouldn't be doing anything. We don't have enough data, and we're in a precarious position because we really don't know the impact of tariffs. We really don't know. And we've never seen a global shot on tariffs. So it's really interesting to see that. So, bottom line, we're seeing buyers today. We got Friday tomorrow. Will they go home long? I'd like to see a close above 59.80 going into the weekend, a sign of confidence. We want to see it staying above 58.50 on the downside. And if we get that kind of movement, that could be a positive setup for next week.
All right. That music means we've come to the end. We ran a little long, listeners, but you know what? Episode 450 doesn't roll around every day. You want to take advantage of it when we can. But I'm glad to have two great guests joining me for the 450th episode. Spectacular. Mr. Nick, we'll start with you. I know you got some cool stuff in the offing. Our pro folks may be using it as we speak, but if the rest of the world is intrigued, they want to check out what you got up their sleeve, where should they go? What should they do, sir?
Well, regardless of what version of the tools you're using, after this weekend, you're going to see a fresh look in the platform itself. So I think you're going to be very happy with what we did. Fresher, faster, and I'm excited about it. I can't even look at our production version. I only like looking at the development version, which is going to go out on Saturday. And that's going to go for the free embedded tools that exist on the cmegroup.com. It's going to be for Quick Strike Essentials, which is the free sort of aggregated platform. That'll be for the tools that are embedded in CME Direct, as well as for the professional edition. But the trial's out there at any time, always available for people to jump in. What's interesting, Mark and Dan, is we've been around the CME now for over a decade in terms of offering the tools and making them available. And when we first started Quick Strike Essentials, I figured we'd get a lot of influx of registrations of people who are interested in the tools, and then sort of see it flatten or taper. Over the last year, we have just seen an increase of people coming to the free tools and registering. So that makes me optimistic that the retail space is growing and expanding, because it's coming from all over the globe, right? So that's where we're really seeing it. So there are people out there who want information, who want to trade, futures and options on futures. And I will say one thing, and Dan, I want you to talk about this real briefly if you can. I know Mark's probably going to kick us off, but I get probably twice a week people asking for, does the professional edition have real-time open interest? The market does not understand that open interest does not exist on a real-time. Now, maybe someday they'll do intraday clearing, but I don't understand where this expectation is coming from the people that are out there.
Well, people do love their real-time OI. We've been fielding that query for a long time. So, and now that you're doing more in the equities, you're going to hear it even more, because people.
I know. I just don't. I mean, I got to tell them all the time. Sorry that doesn't exist, but no, we have a fresh new look in Quick Strike coming. And as you know, we talked about our equity platform, Ask Quick, last time I was on, and that should be ready for prime time. Early third quarter, late second quarter, early third quarter. I'm really excited about that. In fact, Dan, if you are looking at equity, single stock or indexes, let me know. I'll send you a link. You can kick around, kick the tires and see what you think.
That sounds good, Nick. I'd be happy to take a peek at that. That sounds very interesting.
And Mr. Dan, people want to take a peek at your cool vidges. Where should they go? What should they do?
Well, first, I just want to say, Nick, on your open interest, you're right. It's not available. We're getting used to getting information instantly. Does the CME have the data? Yes. Every time they clear a trade, the technology's there, but they haven't gotten to that point. But I wouldn't be surprised to see that in the future. As far as the videos, I do a free daily video at dangrams.com. I look at 22 different markets, 6 different sectors, and we extract a few of those to take a peek at every day. And there's red and green lines, which represent buy and sell levels. I'm not suggesting these as buy and sell recommendations. I just want to share an approach of how you and I can take a look at these markets. There's also a course and a more advanced video which goes over each one of those 22 markets every day. If the market's trading, there's a video for it. The other thing you can do is you can go back over 10 years. So you can say, okay, what did Dan say when this happened? When the things happened last weekend, what did he show in his red and green lines? So it gives you an idea of how things can unfold and the commentary along with it.
There you go. Check him out. Dan Gramza, GRAMZA.com. The place to go to kick the tires and light the fires. That's going to do it for us on the network today. Thanks to everybody who joined us live. Thanks to everybody who's joining us after the fact. Well, we love you all out there. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk some vol. I'll be joined by Mr. Dr. Vix and a whole bevy of special guests. Who's going to join me? Well, you got to tune in to find out. Going to be a good time on Vol Views. Then we come back one final time exclusively for our pro members to talk a whole bunch of unusual activity on options oddities. Nick joined us on that show not too long ago. It was a fun time. I know more than a few of you are already kicking the tires and lighting the fires on his new platform. It's pretty cool stuff. We'll talk some more about some unusual fun tomorrow. Options oddities. If you want to check it out, theoptionsinsider.com/pro is the place to go to learn more. Then we're back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.